Sure.
Yeah,
Okay.
all the everyone's just kind of picky, but that's not the case for your the investors that you could probably find on your own that your friends and family extensions of that. They don't require that stuff.
Yeah, sure. No, that's really
Hmm.
good. So we should probably start winding this down. We've been talking
Hmm.
for close to an hour now, but let me just ask. I've got two more questions I'm keen to ask you. So the first one would be, are there any traits from your time playing sports earlier on in your life that you believe have helped you succeed as a trader? Any traits that have you've essentially carried over and applied to your trading today?
Yeah, I'd say a couple, one off the field and one on the field. Off the field was the preparation of you know, you prepare to develop confidence. That's how at least that's how it worked for me. I If I didn't practice and prepare for the game, I was a pitcher, so a baseball pitcher, so I would need to work on my pitches and protect, do my arm, shoulder exercise to keep my arm healthy, and there's my other exercise for my other body to be loose and stretched and strong and everything, so I could be explosive and move freely and things like that. Um, so if I didn't do those things, you know, in between starts, I didn't feel confident and I couldn't execute well on the field. Um, so that was huge for me because I was not a kid that was blessed like with this Superman talent where I could just like roll out of bed and just like kind of do really well. I really needed to do my work and like do all do all the little things that I don't know that helped me get on the same playing field as some of like these like superstar athletes or these things. So um, that's what helped me a lot, and I became like I got a lot of joy out of it. I almost enjoyed practice more than the games a lot of the time, um, because it's just that like this is what I got to do. And plus I got to like do it while I was like alone. It was like my little sanctuary. I was in the zone and just preparing for the game and visualizing kicking ass on the field when the game time came. So I don't know. I liked all those things. And that's probably why I got into this. Why trend following, why systematic approach appeals to me because you get to prepare. You know, you get to do all the little things, and like the trading is kind of just like pretty easy. It's not a lot of work. It's the practice time and the preparation time is the work. So I don't. I think also on the field, when the game time came, you have the confidence, everything, and you're playing. Sometimes you get into situations that are you have some pressure. You have the game's on the line. You have a big spot in the game where it's a make or break. In my case, like a pitch where it can mean the difference between getting out of the inning or losing the game or falling behind. So was weird, and what I still feel today is that I can deal with pressure very well because I know I've done the work. So if I know, I just keep doing the work, and I know I do what I'm supposed to do, that there really is no pressure. The pressure is really just I feel like when I feel pressure is when I feel like I'm unprepared, and I used to feel that way sometimes in school when I didn't study for a test as much as I should have, or something like that, or making a presentation, which like doing a project that I didn't do as well on, or I didn't prepare as well on. That's when I would feel my heart rate would go up. I get that anxiety, like those rushes through like I get in like my chest, but I get those feelings that's like, oh my God, I don't know what I'm doing. Like I'm not as good. And then my delivery, like my test taking, I'm nervous, I'm not thinking clearly and smoothly and slowly. And same thing on the field. Like the game's moving fast. I'm not as calm, so I can't execute my move, my pitching motion, as fluid and as explosive as it needs to be in order to execute the pitch well. If you're jittery and your hands are shaking and you're not as sturdy on your feet and your mind's racing because you're now aware that you didn't prepare, so your mind is screwed too. So, I think that happens in trading as well. That's when people jump off their systems and jump off their approach. It's likely due to a preparation issue, maybe, or they don't really have a style that they're committed to. They have kind of a style, but they don't have a really rock solid foundation and approach for what they're doing. They're kind of just on the whim, kind of just making it up as they go along, and they're winging it. Like in my test taking, I used to maybe some of your viewers have the same experience too. They just didn't study or something. They come into test and they're all anxious and they're, I'm just winging it, and I'm just whatever. I think I know it okay, but they definitely usually don't know it on average. They don't know it as well as if they took the time to study for it and prepare for it. So yeah.
Absolutely. Yeah, I really like how you highlighted the need for preparation there. I think that's solid. And I mean, in that answer, you pretty much covered the second question I was going to ask here, which was going to be around what a quote I've heard you say in the past is people know what to do, but they just don't do it. And I mean, you kind of covered it there as a lack of preparation. And
and I think that's something that the best traders do really well. They know what their style is. They know what they like about their style, what they don't like about the style. There's some things about trend following I just don't like. But I know I can't have it all. I can't have everything. It's unnatural to have everything. And if you want to have everything, just go observe the star systems out there in the universe. They want to have it all for them. And what happens? They collapse into a black hole and they die. So I feel that you're gonna have to give some things up in order to do your style well. In trading, in trend following, you're giving up the need to catch every little wiggle and move out there. You're giving up the need to even understand what the markets are doing. You forget that with trend following. You're kind of just, I don't really know why this thing is moving that well, but I'm in it and I'm long. I'm in it. I'm riding the trend, and I gotta stick with this because that's my system. I need to ride trends, so I can't afford to not be in this one just because I don't understand it. That's kind of one of the most, I don't know, maybe one of the bigger issues people have with it is that, how can you not know what's going on? What are you talking about? How can you be long a thing and not understand why it's moving? And that's like, how do you answer that? To an investor or someone that is come up with in a career that it's built on understanding things, and a lot of trend followers just don't care about that. And doesn't mean they can't make money, because obviously they've shown there's a history of them doing really well. But it's something that someone who doesn't like to feel that won't be able to be a trend follower then. Sorry, you just won't be able to do it, because you commit that in your style as to not understanding. So you just need to be okay with what your style is and what the quote unquote good and bad of it is. What you like and what you don't like, and that helps you, I think, create a style that you can execute like a Navy SEAL every day. Like you could be able to do it and do it well, and not apologize for, I don't understand it either, but this is my style to do it, and I'm doing it regardless. This is I know what I have to do. So, I feel getting and being in touch with at least the things that you like and don't like, you can create a better strategy for yourself that you could be able to execute well. And then when you can do that, you'll probably you'll stand to do a lot better over the course of your career with trading.
Yeah, no doubt. So, well, Mike, we should probably wind this down now, but I mean, thank you very much for coming on. It's been really great to have you share these lessons and experiences and what you've discovered for yourself in the markets, because I think it's going to be interesting for listeners because you're coming at it from a different angle than what many of the guests which we've had on in the past. So it's good to have a bit of variety in the mix. So I really appreciate it, man.
Sure. Yeah.
Do you want to share with listeners where they can go to find out more about you?
Sure. I mean, I have my firm's trading site is Melicinos Trading. I think will you have it in the show notes, something, because of my name may be a little bit difficult.
Absolutely. Absolutely. So if anyone wants to check out Michael's site and a bunch of other links and any of the resources that we've talked about in this interview, including Ed's site, I'll link to that also.
Yeah.
So they'll all be at chatwithtraders.com/34. Everything will be there in the show notes. So I'll link to your website in there. So definitely, I suggest everyone goes over there, checks it out. Are you on Twitter also?
Yep. Not very active on it, but
okay.
I'm on it. It's just it's M Melicinos. Again, I would put that in the show notes because I'm sorry, my name is Greek and it's kind of tough, but it spells like Melissa. So it's just MELISSINOS.
Got it. Yeah, no doubt. I'll link to that in the show notes also. Because I know many of the listeners are quite active on Twitter, so I'm sure they'd like to check you out there. But
for a long-term systematic trend follower, Twitter, other than maybe posting some maybe more deeper, long form type of content, being on there, like the stock twits guys, like you'll never see like a long-term trend fall on there because he doesn't really, he's not doing much. He's not doing as much as some of those other more active guys. So I know Twitter's good. I know Twitter's good for that, but for me and my style, no. But I should be posting more informational stuff on there though. I think who does that well is Jerry Parker. He was one of the turtles that Covell highlighted in his book many times. He's been on his podcast a few times. He's good, and he's been around a long time. He's probably a billionaire trend follower turtle, probably the most successful turtle. But he does that well on Twitter. Go check him out.
For sure. Okay, no, that's really good. Again, Michael, thank you very much for doing this. We'll call it a wrap, and let's talk soon.
You got it.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
What would your trading look like if capital wasn't the constraint? That's the reality executed with the for those ready to build strategy selection and clearing fees for FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey everyone, what's going on? Welcome to episode 35 of the Chat with Traders podcast. This week I have a very special guest on the show who almost needs no introduction, and that is Howard Lindzon. He's best known as the co-founder of StockTwits, but he's really a man who wears many hats. He's also a trader, investor, hedge fund manager, entrepreneur, and a rockstar angel investor who has invested in over 100 startups at various stages. So, as you could imagine, I was thrilled to have Howard on the show this week. We spoke for around about 50 minutes and discussed the early years of his career, from the days of when he used to work in the back office of a brokerage firm. We also covered Howard's methodology around trading high growth stocks and the idea of buy high, sell higher. We also got into how innovative technology may revolutionize the landscape of trading over the next 5 to 10 years. And on top of this, we also talked about some of the angel investments that Howard has been involved with. Now, guys, if you enjoyed this interview, please go to chatwithtraders.com/iTunes and leave a review. It doesn't have to be anything crazy. Even a single sentence would be a huge help. I'd really appreciate it, and it's the easiest way that you can support this show. So that's chatwithtraders.com/iTunes. Go there now and just leave a very brief review. That would be awesome. Thank you very much. All right, guys, I'm your host, Aaron Fifield. This is the Chat with Traders podcast, and here is this week's guest, Howard Lindzon. Howard, welcome to the podcast. How's it going?
I am doing great. I am in San Diego. It's the opposite side of the world.
It most definitely is. So it's early morning here, and I believe it's becoming evening, afternoon there. So look, Howard, thank you so much for giving up your time today to speak with me and just share your insights and experiences with everyone who's listening. I've really been looking forward to this. It's going to be a great discussion. So again, thank you very much.
No problem.
I'm thinking we'll break this discussion up into a few parts. So we'll talk about some trading specifics. That'll probably lead us into some discussion about trend and momentum. Also keen to speak with you about technology, innovation, and some of the angel investing work that you do. So before we get into all of that though, I'm keen to hear about your background and where it all started for you. So once you graduated from high school, what was the next step from there? Maybe take us through to the point of just before you launched your hedge fund.
After high school, I worked in the... I went to college in London, Ontario. Nothing fancy. And then when I graduated, 87, I didn't have a job. Didn't know what I wanted to do. Go to school much younger in Toronto, a year younger. And I went to work in the stock market at a brokerage firm in Toronto. Right before the peak, I was working in the back office. Order tickets would come in on a machine, like a little air terminal. The ticket would come in, you type it in the machine, it would go down to the floor, you get a confirmation. That's how archaic it was back in 87, which I'm sure seemed unbelievably like great progress compared to 20 years earlier. Now basically you can click a button on Robinhood, which is now even in Australia, and trade for free right from your mobile phone. But back then it was, a process. I worked in the wire room, knew not much about the stock market. I was probably 21. And in October 87, the market crashed, and I just never forget where you were, especially since I was in the industry. And, people banging on the door, orders piling up. I was the guy people were screaming through the window. I was the guy trying to type orders in frantically, and I didn't even know what was really happening at the time. Other than I could tell it was something major. And the firm that I worked at shut down. They had a huge position in gold, as most Canadians, like Australia, is a mining based and a manufacturing base in countries. And there was a heavy duty recession. The brokerage industry was buried in margin and no business for months after, and the gold stocks were hammered. So that was my introduction to stock markets.
Okay, and was that always your goal from right back in high school to once you got out to go into the stock market, or was it just you just kind of wound up there by a bit of luck?
I just wanted a job. My dad was a a trader, an investor, but I didn't have an interest in it. So, I was just looking for a job. I went back to school after the market crash in '87. There were no jobs, and moved to Arizona. Went to school at ASU. Became a desert kind of rat. Graduated, and as luck would have it, or fate, I ended up, because I was a Canadian citizen looking for a job, I ended up having to take an ad in the paper and just became a stockbroker. It was the only company that was willing to sponsor me to stay in the United States was to be a stockbroker. And so I became a stockbroker knowing nothing about the stock market still.
Okay, and is that the point where your interest was peaked and you developed the fascination for trading, or did that still come a little bit later?
Oh, much later. So, back then you couldn't think. You were just had to learn the market, pass your exam. It was 91 after the Gulf War. Stocks were savaged. I didn't even know any of this. So it was a great time to be getting into the stock market. And it was the end of the S&L crisis in Arizona. There was all kinds of savings and banks. The banks were destroyed, much like 2008, and because of the savings and loan crisis. And so it just turned out to be a great point. I didn't know what I was doing. I was just trying to sell what the firm had. It was a pretty good firm. We weren't selling penny stocks or anything. I mean, I had my list of stuff I would call cold call. It was back then you would do cold calls. And so slowly, that's how I started to learn the market. I had no mentors other than from a sales perspective. I was taught how to sell. So I tried to keep it simple, but over time, I just became fascinated with stocks and prices, and it took me probably maybe 87, 91. It was 24 years later, I've learned a thing or two.
Okay, sure. No, that's awesome. So, between being a stockbroker and launching your hedge fund, what went on in that period? How did you make that transition?
You start meeting people, get a little older. I was fascinated with the market slowly over time. People had started to trust me, and it was a bull market, so everybody thinks they can do it in the mid-'90s to the late '90s. So I think a combination of all those factors, plus knowing a lot of successful people, I decided to strike out on my own and start a hedge fund, knowing nothing about it. And in '98, when you started a hedge fund, you were like theoretically at the top of the market. Flash forward 17 years, hedge funds are more popular than ever, even though they've been supposed to have been dead for the last 20 years. So, the lesson there being it's never too late to start a business, no matter what the categories. You gotta love what you're doing and be able to ride the ups and downs, and so the same thing applies to every aspect of, working or entrepreneurship. Or what I talk to my kids about is like, I remember starting that hedge fund and people going, nah, who doesn't have a hedge fund? And this was in '98, during the Kramer, Street.com, passionate era of blogging and writing, or the Street.com at least was blogging, and Jim Cramer was like, oh, of course you're starting a hedge fund, who wouldn't? And I've been running that hedge fund for 17 years now, and it turned it into a big business, a small business, because I'm too busy, and my passion has been more about private company investing, not so much trading other people's money. So my main passion is investing my own money and investing in startups. But that's how it's evolved. But I still have that hedge fund 17 years later.
Absolutely, and I'm really keen to get into those two things you just mentioned there. Just while we're on the hedge fund topic, did you have any experience actually trading your own money before you went into launching the hedge fund?
Yeah. My parents divorced. My mom had no idea. She had a little bit of money. I was 19, so I was stuck. That was my original. I think I've written something about this way back, but the thesis being, your original exposure to risk and management, really shapes your risk profile later on. So when I had to take over my mom's account, I couldn't risk losing $1. And it's kind of the same unfortunate or fortunate way that I look at the same unfortunate way or fortunate way I say I look at how I deal with other people's money today is that where I struggled in the stock market was I couldn't afford to lose money. So it's not a great place to be if you can't take risk. And so my strategy has always been a little bit more conservative. Over time, I've developed a much more aggressive strategy around momentum, and things in motion tend to stay in motion, but definitely not good for my mom, or it's definitely good for my money because I feel comfortable with it, but I don't like managing that strategy for other people's money, which is why my hedge fund doesn't take new money and why I focused on private companies, because I'm all about a momentum if my investors understand that they could lose all their money. And that's the way when you invest in an angel fund, which we've started through social leverage, my investors expect me to take big risk on big trends, and bad things could happen. So, it's in managing the expectations of my clients and my own lifestyle and risk profile. That's how over 17 years you end up with, evolving your thesis and your product so that my risk profile fits the risk profile of my investors.
Absolutely. Okay. No, that's really well said. Now, this is a question I usually ask to guests on the show, and I usually ask them what were some of their biggest challenges as a developing trader. But in your case, let's open this up. So, what were some of your greatest challenges or failures in your early years as a trader / entrepreneur / investor?
Well, I think, like I said, the structure of my life around risk, because I had some of my mom's money that she couldn't afford to lose. I knew it had to last. She's still alive today, so that's 30 years later. I was 19, 29, 39, 40. I'm 49, so 30 years later of managing her small nest egg, I've had to, knowing that I'd have to support whatever difference there was, assuming she lived till 100. So I've always been, that's where my risk profile was structured for good or bad. Mistake-wise, in starting a hedge fund, I've made so many. I mean, obviously starting it in June 98, the Asia crisis happened right after, the 2000 crash in 2008. So plenty of mistakes. Most of my mistakes more have been about people than about stocks. I'm pretty good at taking losses. I've learned to not listen to the TV, and, I read people that think like me, not because I want to form fit my ideas, but just, strategically wise, I try and just focus on my strategy so I don't bring in outside noise. So all those mistakes that people continue to make about trying to just have too many styles or survive in every single market. I'm not survive so much, but thrive in every single tick of the market. Once I settled on my style and communicated well with my limited partners and my clients, and they understood what I was doing, they never had to bug me, and I never had to worry about what they were thinking because they knew what I was doing. I think most investors just try to make money all the time, it seems like. And it's hard not to, because the market is, just right there for us every day, all day. And I think the great investors will tell you, it's a lifelong process, but the great investors will tell you that they just don't trade that much. Most of the time you're just sitting. So, that's by sitting has allowed my life to expand and my portfolio to expand, because by sitting you have a lot more time to look at more things and really kind of the good pitches you're just more aware of instead of just hacking away every day at the market.
Okay, so let's dig into your strategy then. How would you best describe your approach to trading? From what I understand, you're both into trend following as well as momentum trading. So would you like to elaborate on your actual methodology for trading?
Yeah, nothing fancy. I mean, the basic example is buy high, sell higher. An IBD philosophy, or Bill O'Neill, is that stocks in motion tend to stay in motion. And I'm small enough that I've just kind of evolved my strategy to think like a pilot fish. Sharks are out there moving the waters, and I'm just riding there with them as long as I can, and have a pretty good sell discipline. I would say every time I make a mistake, it's generally around selling, not buying. And in the private market, it's a little different. because you're not liquid. So in the public markets, I like to swim in the most liquid markets because you can change your mind very quickly. There's liquidity, and then in the private markets where things are illiquid, it's still very much a momentum-based strategy around trends and applying them to private industries, but a little more sensitive, obviously, to price early on because they are illiquid.
Absolutely. So just talking about the public markets still, what are some guidelines or perhaps common characteristics to discovering the big market winning trends before they actually happen?
Well, they tend to happen in consumer stocks, whether it's restaurants, fashion, or consumer brands like Apple. They generally are easy to. They're brands that you're already using. One of the best stocks of all times is Philip Morris. So I would say it's still a consumer brand. It's a SIN stock as well, and 99% of us have never owned it unless it's been in an ETF of ours. For as good a stock as it's been. So, they're generally brands that you've heard of, shockingly, whether it's Nike, Under Armour, Apple, Google. I consider all these consumer stocks, not technology stocks, because we use their products every day. Chipotle's, and these are right in front of us most of the time. And then generally they stay overvalued for extremely, 5 to 10 year periods. Some of them longer, but generally, I can hold stocks 3 to 5 years. That makes my job easier. It doesn't always happen that way, but I'm looking for things that just are part of bigger consumer trends.
Okay, and you mentioned a little bit earlier that you like to buy high and sell higher. So you're looking at stocks that are breaking into all-time highs, and I've just got two questions around that. What is it you like about stocks that break into all-time highs? Like, why is that a good thing? And do you also pay attention to perhaps shorting opportunities that occur from stocks breaking down into all-time lows?
Yeah, I would think that, definitely on all-time lows, there's a strategy that works. But mathematically, over all the money that I've ever wasted learning and spending on shorting stocks and looking at the Fortune 500 list, I don't know anybody who really is. If I were to look at Buffett and some of the best investors, they don't short stocks. They ignore them, and they use cash. And so, no, shorting is just like, I'll talk about it occasionally. I have this feeling about the market, but I'm never right because the math is stacked against you generally. And so, no, shorting is generally out. And then all-time highs is just something that works for me. It's counterintuitive. Most people ignore this, even though there's so much data available on how the strategy works. Nobody cares. God forbid you tell somebody momentum, their heart seizes and their ears close, and they think it's voodoo. And I like knowing that. I mean, if everybody did it, it wouldn't be as easy. And investing is hard. Buying high, selling higher means that you are buying stocks that are obviously discovered because people own them, but at the same time, they also are highly shorted because the professionals, love to hedge and love to bet against companies to get paid their 2 and 20. And, historically, stocks that are at all-time highs got there for a reason. They were on an all-time high list the day before, a week before, a month before. So great companies growing really fast with catalysts tend to make hundreds of all-time highs. And so it just makes common sense to me as a small investor to follow those type of trends. It's not for everybody, right? Like, it's not for everybody. It's just, I like to keep things really simple. And if I buy a stock at an all-time high, it means there's no resistance. Everybody who owns the stock is profitable. Everybody who short the stock is freaking out, and that's potential buyers. And it's, and then when I can combine it with a catalyst like, oh my God, this is a product that's being underrated or undervalued, or really simple stuff like, oh my God, this company, when it was Apple, it was like, fuck, there were 60 stores. I'm like, I could see 60 stores just in China. And this is like 8 years ago. So, buying it when it was 60 stores just in the United States seemed like just a simple, good idea. And the stock was, had been at all-time highs for 3-4 years already by 2006. So, in hindsight, it doesn't look that crazy. Same with Chipotle's when they went public. What were they? A couple hundred stores. And yes, McDonald's was selling their shares, but in the end, that it was just early in the growth process. And Wall Street likes growth. Like in the end, try not to overthink it. Wall Street still pays up for growth, historically, and always.
Okay, so once a stock's broken through to all-time highs, there's no previous highs that might act as resistance. What are perhaps some warning signs or red flags that you watch for, which may indicate that a trend is nearing an end?
Yeah, it's a good question. A lot of it is just feel. A lot of it is trial and error. A lot of it is your own risk preference. I can sell on the way up. I generally sell on the way up. So, I leave tons of money on the table. The greatest traders pyramid in. I'm pyramiding out. So, but again, that goes back to my risk profile. And the fear of losing money is greater than my joy of making tons of money. And that's, you got to live with what you got. And you can't, I've just lived within those means. But the signs are generally, sometimes you never get a warning. So just blindly buying all-time highs is not, a perfect strategy. And sometimes, I get the catalyst wrong and stocks implode without much warning. But most of the time, stocks give you a few warnings in price and volume. They give you warnings around on earnings. And sometimes you get one warning and the trend is over. And sometimes, it's a fake warning. But, you just have to have your money management skills. Some people, have 10% drawdown rules. Some people have 15%. I'm more, a blended. If I really believe in the trend and the market's strong, I may give a stock more room. Just depends. There's not one style fits all. And I'm very unscientific. Ivan, who trades for me and is a young guy, Ivanov, who, works for me, has his own style that he deploys on top of my style. But generally, right now I'm long a couple stocks that I don't fully have the full thesis on, but I use their products and I'm bullish on them, Chegg and Lulu. So those are two new additions that, they're not at all-time highs. They're very strong right now in a tough tape. And I understand what I think are the catalysts. I think one is, evolving into a huge learning platform, and the other, Lulu, is products that I use all the time. And so I think both are trends that, while the stocks aren't at all-time highs, I break my rules all the time for stocks in good uptrends, but, aren't quite at all-time highs. And then Nike and Under Armour, I've been long for, on and off for 5-6 years, mostly on, where, the stocks have been at around all-time highs for most of the last 5 years.
Okay, sure.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watch a stock rip and think, I could have nailed that if I had real capital. The truth is, many capable traders never reach their potential, not due to lack of skill, but lack of scale. Trade the Pool was built to solve exactly that. A firm designed for serious individuals who want access to the U.S. equity markets with meaningful buying power, up to $200,000 without committing their own capital. Get access to virtually every stock and ETF. Go long or short freely with the flexibility professional traders expect. You're evaluated on one thing: your ability to manage risk and execute with consistency. Meet the standard, and you trade at scale. No subscriptions, no ongoing commitments. Whether you're still refining your strategy, a trader with experience who hasn't yet broken through, or a seasoned professional simply looking for more capital, Trade the Pool is built to meet you where you are and take you that next step further. The markets have evolved, access has evolved, now so has the way traders operate within them. Trade the Pool.
Now, this is something I've heard you say a few times in the past, and that is there are no experts. So I'm interested to know what makes you actually say this.
Well, the market's the expert, so the market decides. You know, you can fight the market and get run over, or you can be the market like Goldman or Warren Buffett. They basically are big enough; they are the market, and they make the market. But if you're not making the market, you have to respect it. And so I don't listen to anybody except the price and volume and my own instincts around catalysts, the products themselves. So, you know, Wall Street's all about, oh, this guy said this and that guy said that, and the CEO said this. And I'm more about what are the consumers doing with those products, and being more in tune at the street level with what's happening. And then if the price and volume confirms what I'm thinking, I'm like, I would love that. And I don't care what anybody's saying, because there are no experts, because the market has decided what the price and the volume is.
Yeah, I mean, I really like that quote because, I mean, as a young trader and someone who's coming up, it can be very easy for them to be influenced.
Well, you need mentors. So, you know, if I can be a mentor to people, but you have to listen to me for hours to find two nuggets, I guess, because I'm, rambling on. But, I didn't have great mentors. So, the young people today have great, like I said, I was a stockbroker, and they just threw me in a room with fill a binder full of Blockbuster and Compaq and the shit that we're selling and go sell that. It wasn't like I had time to learn the intricacies of the market. Now you can go on StockTwits and find 200 people that are expert in one specific subject. And you can get right to learning anywhere on the web much quicker, and you can trade for free. So, if I had only known, so, at StockTwits and anything that we're focused on in Robinhood, which we're investors in, we're focused on helping people, onboard and learn the language of the markets much quicker. That's all we can do. That's all we can do is give people the tools to learn quicker, but not tell them we're the experts, or, we're not selling anything other than the magic of, oh my God, the markets are awesome. It's like learning Spanish takes a while, and you're better to immerse yourself into it, and you're going to make mistakes, and you're going to offend people, and you're going to, but that's the market.
Of course, yeah. So while you mentioned StockTwits there, I'm sure you get asked this all the time, but what actually sparked the idea for StockTwits? Did you see a genuine need for a service like this at the time?
Yeah, I don't use Bloomberg, don't read Wall Street Journal, don't watch CNBC. I was reading some blogs of venture capitalists really discovering trend following, and I was a Momentum IBD guy, so reading Investors Business Daily every day or on the weekend. And Twitter started, and I had an opportunity to invest early, and I was using Twitter, and I was like, oh my God, Twitter for stocks would be amazing. This was 2007. And I emailed Fred Wilson, who was one of the biggest investor in Twitter, a friend of mine, and said Twitter for stocks would be incredible. Why don't they do this? And he said, why don't you start it? And so I kind of got, dared into starting StockTwits, which was originally built on the Twitter platform, just, figuring Twitter would just incorporate it and either acquire it or partner and I would just help curate the financial section of it, like a financial part of Twitter, which in hindsight, that's what, I think the best part of Twitter still is. And then slowly StockTwits has built its own platform that doesn't rely on Twitter, but uses Twitter to get leads and find smart people. And StockTwits is its own self-reliant ecosystem of traders and investors. So really started out as just an idea to work on top of Twitter, but Twitter had its limitations, and we wanted to build a community just for traders, and that's how StockTwits started. So it's been almost 7 years.
For sure. And a lot of listeners, I'm sure, are active users on StockTwits. What's the advantage to these traders who use StockTwits, particularly the newer traders who are using this platform? Like, how can they get the most out of it?
Well, it's different strokes for different folks. If I could explain it, we'd only be 100 people because they would all think like me. God, it's so big that I don't even know all the different reasons people use it. But for me, I'm mainly on the mobile app these days. So all I think about is mobile because I'm on the road, and I've always wanted a product that allows me to catch up on my watch list really quickly and have the key people that I know follow that stock to be able to talk to quickly if I need something. And then on a bigger picture, who are the 8 or 10 people that Global Macro look down and can give me, end of day kind of readings in 5 minutes? How do I catch up on the market really fast from my iPhone? That was always the goal. And we're finally getting there with our latest apps. And on the website, there's a million ways to use the product. You can start by searching by tickers. You can follow me and say hello. Just to be able to access some of the greatest traders who are doing it for their own reasons, most of the time just to journal and keep themselves accountable and to their own money. I think what people misunderstand is the reason people use StockTwits, the good ones, or at least why I use it, is just to write my own ideas down so that I can be called out on it. And I don't want to tell people what to do. I just want to write down what I do. And I think that's the big difference of StockTwits, I hope, over old media, which was everything pre-Twitter, and including Twitter, unfortunately, where there's so much spam and penny stock chatter. But the idea for me is, here's what I'm doing. Tell me why I'm crazy. And you don't have to do it, but I'm just journaling what I'm doing. And then updating it.
Yeah, I like that answer, and I like how you mentioned access in there. I think that's a really valuable feature of StockTwits, is being able to access other great traders and network with others who are maybe more advanced.
It's just finding mentors, networking, saying hello, being if you're not nice, you're generally going to be angry and confrontational. You're not going to last but an hour on StockTwits. We've built a culture which is like, hey man, like you can hang out and take all my ideas and question me all you want, but don't call names and don't attack. And that's been a hard kind of culture to build, but I think we've succeeded. That may not be $1 billion idea, but it's definitely something we're proud of.
Yeah, I'm sure. It's helping a lot of people, so that's a good thing. Now let's move this discussion along a little bit to talk about some technology and innovation that you've seen coming through in this space. So, in the past, you've said there's never been a better time to start a business than there is right now. Would you say that's perhaps the same? Would you say the same applies to traders of today?
It was very one way. Like you read a research report written by some dude or some lady, and now I don't know why the only reason I read people here is because they show up every day and they're willing to be yelled at if they're wrong or laughed at. Not that you should yell or laugh at them, but like, man, were people here pouring their ideas out and are accountable, and 7 years later still doing it. So I think the difference is, the hierarchy has changed. Back then you had to have a title, you had to have this pulpit, and you had to earn your way into that. And then once you were on it, it was hard to kick you off, even if you sucked. Now it's like, fuck, if you don't have the game, you're not going to last an hour on StockTwits. And if you do have the game, you're going to be revered, but you're only as good as your last, 6 months. So if you're gonna, you just have to consistently share and journal and contribute. Otherwise, you're not going to make it. And that's kind of the market, right? If you really want to be around forever, you got to love doing it, and you got to love sharing, and you got to be wrong all the time. Sometimes as much as 60% of the time. Who the hell wants to do that other than baseball players? Baseball players, the only other people who are like 300. You're hitting 300, you're a fucking all-star. The other time, 70% of the time, they're walking back to the dugout with their fucking, head in their ass. Right? And they're like, still come out, like knowing that 70% of the time they're going to look like an idiot chasing a pitch or grounding out weakly to the shortstop. And that's kind of the market.
Yeah, you've definitely got to get comfortable with losing.
Yeah.
That's for sure. There's no way around that.
Yeah.
What changes do you anticipate coming to the trading landscape over the next, say, 5 to 10 years, particularly in the retail space?
Well, I think we get more of the same. It's obviously mobile. You're going to have to consume these products in mobile. So we're going to see with the beginning of like mobile trading, a pure mobile, like a Robinhood and the ensuing knockoffs and copycats and lookalikes. People are going to be able to open an account in 2 minutes. They're going to be able to follow smart people. They're going to be able to execute a trade for free. They're going to be able to follow mentors. And they're going to be able to do all this from a link on a mobile phone. That's pretty revolutionary. I don't know if we could ask for much more. But it took 20 years for us to go from 1991, which was the beginning of 2001, which was the end of the last bubble, to where we are today, which was when E-Trade and TD Ameritrade and Schwab were in their heydays and coming to the end of, the e-brokerage. And now we're finally having some innovation in mobile brokerage, which is like a whole new generation of millennials globally who either are going to inherit money or have their first job and, may not want to just dollar cost average, which has been droned into their heads for the last 10 years. They may actually want to buy the stock of Facebook or Twitter or GoPro or Shake Shack, to use U.S. stock examples. And, they don't trust E-Trade, Schwab, Goldman Sachs, Bloomberg. They don't even know about them. The last time they heard about them was Jon Stewart making fun of them. And, so they download an app on their phone and they discover investing for their first time, and they can do it with $2,000, and they can buy 10 shares of Facebook for zero commission. If it goes to 95 the next day, they made $50. They don't have to owe 30 of that in commission. And they just basically paper traded with real money and had a great experience. That's much like what Uber did to the old taxi industry. So I think we're at a renaissance point for people to do it themselves. And that's great for global markets, especially with startups at all-time highs. So it's just this massive opportunity. And so for the young people that are learning how to do this, they're just going to have a lifetime of investing ahead of them. So it's an exciting time. It sounds like some kind of cheerleader, but it's so obvious. This trend is so obvious.
Yeah, there's definitely a big shift coming through. So no, that's really good to get your take on it. Now let's shift this along to the last part of this interview, and I'm keen to ask you about your angel investing and experiences you've had around that. So, at what point of your career did you begin getting into angel investing, and maybe also if you could share with us why you got into this, like what motivated you to go in this direction?
My first angel investment was a cold call that I made as a stockbroker, 92 maybe. I was just calling, dialing for dollars, and we would open up the newspaper in Phoenix, the Business Journal, and I would just call people that I thought were rich that were written about, and then pitch them on opening a stock market account. And one of the guys that I called, Mark Scatterday, was a great guy, ended up investing in his company. I go down to pitch him to open a stock account thinking that he was rich and he needed money he was raising money for his company, and he talked me into investing in it. And that's how I got going on angel investing, and it just turned out to be a great investment. But it wasn't easy. It sucked up 5-6 years of my life, and we made tons and tons of money, and we had one of the great consumer products. But so, I got into angel investing by mistake, but the passion was there. I had the education, I had the will, I had the I love to sell and I love cool products, and that's how I got the bug. And then I just kept writing checks. I was kind of a sucker for a good pitch, and over 20 years, 92 was my first investment. 23 years of angel investing, I figured I know a little bit now.
No doubt. So, what is it that actually attracts you to mostly tech investments over other industries?
I like consumer products, so I would say tech applies to everything now. So I'm more consumer focused. Consumer, it's just interesting to me because it could become $1 billion company. I mean, it's harder to build, but why not build something that could change the world? So I would say it's more consumer, but technology just is such a bigger factor in every company right now because of scale and costs of starting these businesses and using Amazon Web Services and having a laptop and an iPhone or a Droid. Everything's technology. And so if you don't know how to use these tools, you're just going to have a small local business. But now any small local business can be a global business. So consumer is number one. The main thing that attracts me is stuff that I'm passionate about. Like, money is a commodity, and I'm not rich enough to just throw it around. So I generally like to invest in companies that I either discover myself or that fit into my thesis around financial technology and financial web, which led me to Robinhood and my whole thesis and StockTwits. But I invest in great founders who have this insane passion around a problem that they're generally solving for themselves because they have this huge interest and something's bothering them. But then those interests generally end up having a huge audience. I've invested in a few billion-dollar companies at the beginning to know that a lot of times you just could not imagine them being, almost every time. They don't start out as billion-dollar ideas, but they're kind of unicorn founders. They throw around the word unicorn a lot, but generally it's the founder that's the unicorn. It's just someone who's willing to fight and scrap and pivot and change their product and get shat on and yelled at and been told their product sucks, but really know that they're solving a problem that then 10,000 people start using. And then once it's at 10,000 people, how do you get it to 100,000? And that's where the technology applies. And then how do you get it from 100 to 1 million? So they're all different stages. I like to find the companies that have great founders. There's a clear path, a hypothesis to get to 10,000 type customers or users, and that already have one passionate user, whether they're paying or not, or two. And that's kind of where we invest. And, as I get older, I move a little bit further up the food chain because I'm just old and not willing to do as much of the little bit of work. But hopefully that gives you a little bit of insight.
Yeah, absolutely. So just one more question around that. Now that you've invested in like 100 plus startups and companies all at various stages, I'm sure there's a few deals that you've turned down at the time and you later kick yourself for. Are you able to share an example of maybe one or two deals that you've let go, which you maybe wish you hadn't of?
Yeah, different reasons. So Zynga I passed on. I knew Mark Pincus. I really had agreed to invest in the deal. We were having a argument over another company that we had invested in, and Buddy Media, which turned out to be like a huge company. But I had brought Mark into that deal, and he didn't like the way it was going and was complaining and came up with his idea for Zynga, and I agreed to invest. We had agreed on a price, and that price quickly changed to a number that I wasn't willing to invest in a few months later. And so I just on principle didn't invest, and I should have invested. I think 100 grand would be worth 10 million. And so that's a bad one. The lesson there is even if the founder wants to be a billionaire and you have a chance to invest with them and they're willing to do what it takes to be a billionaire, you're pretty silly not to invest in them. And I think that's why people just continue to give Warren Buffett money at a premium, is the guy is just like, very early, probably like a $2 million